Good afternoon, everyone. It is Wednesday, April 30th edition of Trading Trends, coming at you with a show. Oh my gosh, I'm stuttering, John. To start the show, coming with a single stocks edition today. Actually, had a user request for a specific stock going into earnings. There's some stuff going down right now, specifically Meta and Microsoft. We'll take a look at the end once more comes in, but it looks positive. It's already lifted the Q, so we'll take a look at that at the end of the program. Today we'll look at single stocks. I try to do this like once a week or so because I know people ask for it, across the globe. So I want to do that. Some big movers today. We'll take a look and I'll also do something that I don't usually do. We'll do a year-over-year recap of the best stock trades. We usually do that for the ETF land, but we'll do it today for the singles. So without ado, let's get into it. So here was the chart. I picked this because markets were mostly higher today, but also this graphic reminded me of a Primus concert I went to years ago. So it was pretty cool talking about this guy. But a weird day. Volatility was up, rates were up, and tech was up. So kind of a strange day. In terms of the single stocks that we're going to focus on, Qorvo and Seagate, double-digit gains. If you had those today, congrats. We'll see what happened with those. Likely earnings. It's a busy earnings season right now. And then the downside, Costar Group, Super Micro, and First Solar all had big drops, pretty much all double digits. And then we'll take a look, as I said, at the other things. So first off, what's up, my brother from Italy? Can we do Palantir? That is the request I had from the other user. I just opened up the show. Alina also requested that. So yeah, we'll look at Palantir. It's actually part of my best of the year stock, one of the best of the year. So we'll take a look at that. But first off, really fast here. So SPY, interesting tape. A lot of people, I know Trump, the thing that went viral was Trump saying, this is Biden's stock market, and he's been in for 3 months, but irregardless. So the market looked ugly here going into the open, and then that was actually the bottom at 9:30. We hit a low of 541.5, and then we honestly rallied throughout that. It was oversold, and we rallied all the way throughout the rest of the day. Really good strength at 10 a.m., getting above that VWAP. We were still just up 12 bips on the day at that point. But as you can see here, rising all throughout the day, and then really a surge of buying at 3:30. I'm not even going to keep up now with the rumors about tariffs, this, that, and the other thing. But Bessent, Lutnick, what everyone says. Let's look at the chart. So then there was a slew of buying at 3:30 p.m., which took us all the way to about 5:55, and now we're rallying further on the positive Microsoft earnings. Actually, they look like they both faded. We'll take a look at this at the end of the show. We also want to see more analysis and more time given, but we'll check out Meta and Microsoft at the end, I promise. So this was the market. Again, I'll zoom out here for more context. Big level here at 556, if you recall. So let me take out this panel. So here we are on the 1-year chart. Again, we were calling for the bullishness to end around, middle, today's Wednesday. About end of last week, I thought this was going to end right around that 540 level, but it's shown some nice strength here. We are still plateauing. Nice candles here. This is very nice, and I think tomorrow, like I said, we'll check what those earnings are doing, but this could be not the worst thing in the world. The 200-day is still going down, albeit it's kind of a flat line now. It's at 573. The world has a lot of overhead at 573. It'd be very interesting to see if we hold that level. But in terms of recent strength, the 21-day expansion moving average is 542, and we've lifted above that right here where my cursor is since the 25th. So some good strength out of the market. Again, the 548 mark for me was very important. That's the 1-year 50% Fibonacci retracement. It's good to see that we're holding above that. Again, there's right here where my cursor is, also coinciding with the early month lows, really before the breakdown significantly really happened. We got multiple percentage points away from a sliding 200-day moving average. So very important levels. Again, I just don't want to say trees go to the sky. You saw what the market could do today on some scary headlines potentially, but we are above 50 RSI now for since the 24th. So 6 days does not a trend make, but this is definitely going in the right direction. Now we are tangling with the 50-day exponential moving average. So before we get to the 200-day, you got to close and hold above 543. I'm sorry, above 555. And we did that just today for the first time. So this is all steps. You got to crawl before you can walk. So it's awesome that we closed. The first level to me was 548. And then after that was truly right around this 555 mark. And then the next big kahuna is 573. We'll see if it's able to do that. I think it's getting a little bit long in the tooth, a little tired, but we could still have some momentum upwards. And of course, if Meta and Microsoft helps, that can go far. And don't forget Thursday, Amazon and Apple. So these are super, super duper important, 20% comprising of the S&P. So that's all I have to say on that. Let's get into the single stocks. Boopity boopity bop. Where is my doc? Here we go. All right. So let's take a look. I haven't done the single stocks in a little bit here. Let's take a look. So some stock that moved multiple sigma or multiple standard deviations. So Mondelez, I know folks might say, what? It's up just 4%. For a stock like Mondelez, that is a big move. Okay, so in standard deviation, these are the guys that make Oreos and those kinds of food products globally. So this is a massive firm, $85 billion. It reported earnings yesterday, and they beat, and that is what the 4% liftoff is for. In terms of the character change here, I mean, the 200-day moving average is 66. Not a terrible. This is really just in the middle here. I like the earnings. Again, this is kind of defensive, and obviously they have an international tilt. There's worse places that you can be in, but I don't love this one for it's really kind of sideways. Obviously, as you can tell, the 200-day is just flatlined at 66, and we hurtled above that today with the earnings. But long story short, maybe too late for that. Before earnings would have happened, I would have said this probably descends for another week or so, and then gravitates towards that $66 line, and that's kind of essentially now we had kind of a reversal of earnings being a buoy, if you will. Let's see if it can break this $70 mark. It has not been able to do that since the earnings of October. So if you're in Mondelez, it's kind of a tough chart, but there's definitely worse things that you could be in. I like this overall, and it's also been largely holding above a 50 RSI, and including overbought periods in March. And it has international tilt, which is the flavor right now. So pick your spots. I think you potentially have another chance to get into this around $66, which is the 200-day moving average, and then maybe you get a lift to 69, towards end of May. So that's Mondelez, 4%, a big mover for that. Now let's look for some bigger percentage moves. These are also, of course, multiple standard deviations. Seagate Technology, haven't looked at this one in quite a while. That chart right there is pretty emblematic of technology. Seagate, it does provision of data storage infrastructure and technology globally. So up 11%. They had earnings yesterday. They beat. This is a $17 billion company. This looks like so. This chart looks a little bit clearer. It may go a little bit higher. I don't think it's going to clear this 200-day moving average. To be frank, I'm looking at Bollinger Band on a different chart, and I see 88 for an upper band. If you get some vol expansion as you did today, it gets to about that 89. So a nice thrust here, but there are better areas to be in. I don't love it. It's had a nice week, as has the market, but there's better names than this. As you can see, a lot of the red here, oversold, oversold, oversold. A pinch of buying here after this report in January, overbought and extended here, but not to new highs. I just don't love this one. I think this is maybe as good as it gets, this $91, and it possibly gets down to about $80 over the next 2 to 3 weeks. It sounds like a lot, a $10 deduction or 10%, but I was just taking away today's gains. So really be careful. These are going to be mixed, forecasts on these things. Again, when the market is stretching higher, you really want to be careful and pick your spots. The next one, but a nice day today if you capture this in Seagate. Again, a lot of these are earnings reactions and mixed pictures overall. Qorvo, have not seen this also in quite a bit. I'm not talking about Jose Qorvo. This is a semiconductor. This is a $6 billion company. These guys do, wired power markets, wireless and analog worldwide. Cool. So these guys had earnings yesterday and they beat. Chart looks heinous, honestly, has not been anywhere nearby since September. They flirted with being some, really some impressive movements here in January earnings when, other tech had good earnings too. And then, 52-week low just 3 weeks ago. It touched $49 and now a quick rally all the way to 71. Now what? Don't love this chart. I think it's done. You're not even seeing higher highs here. So I'm not really impressed if this was building up instead of breaking down. But, I don't love it. Again, full valuation for me on this is right around 72. So it might have a pinch more, but I do think this settles around $64 over the next 2 to 3 weeks. All right. Now let's look at the losers today. There were some big losers. Let's take a look at Costar Group. What do these guys do? I feel like it's the old, oh, these are real estate. Okay. So these are, oh yeah, that's right. Costar, they do information analytics, online marketplace for real estate management development, pretty much US, Canada, globally. They are a $35 billion company. So these guys reported earnings. They beat on EPS, 19 cents versus 11 cents expected. I'm guessing they got it down with a muddled higher rates and bad sales picture. But these guys got hammered today, down 10%. You can see the chart. I mean, it's pretty bad, pretty mixed. But the yeah, that's just ugly here. I don't like this one. This looks like it wants to get to over the next 2 weeks or so. I think this wants to get to about $70. And again, today it closed at 74. It's a messy chart here. It sliced right through the 200-day moving average, which it has been holding on since April 10th. So a break in trend there after 3 weeks. And I just don't like it there. And again, the 200-day moving average is also rising here. I don't know if it'll do so after a large input down like this today. But a mixed picture. There's definitely better stocks than this. Don't love this. It's overall mixed. I'd be like a neutral minus on this guy. Next, I know this was a lot of focus today. This is probably the most traded down stock today, and that's Super Microcomputer down 11%. So tech in focus to the upside and to the downside today. Of course, we all know Super Microcomputer. They are the $20 billion company that does, high performance server storage solutions, et cetera, et cetera. So down 11%. These guys reported earnings came in line. It seems they reported 60 cents versus an estimate 58 cents. Got absolutely hammered though. Ugly looking chart, except for this earnings spike in February. That's pretty much it. There's really been no reason to hold this stock. I mean, I'll give you the benefit of the doubt. There's several points, but really, if you were early getting out, Yen Mageddon was a perfect exit for this stock. They reported earnings. It wasn't so grand overall, and then you saw what happened with the overall market. So really, a great exit. I mean, hindsight 2020, but should have got out of the stock at 60, and really no interest for looking back. This would have been a little bit confusing here. So this is a good lesson in technical analysis, actually. So this is overbought and a close above 200 moving average. That's why I say I typically like to see really a character change. I want to see it hold for a week to as much as 4 weeks if it's a larger nation, lower vol ETF. Of course, this is super micro with a massive ATR or average true range. So I would want to see this more than 3 days. And again, this went into earnings. So kind of a scary forecast, always a risk you can have with single stocks during a season like this. And then it went south. So it gave that up. So that's not as much. Again, and this is really the profile. Down, 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 down. This is like the Magic versus the Celtics. Can you win a game? Yeah, maybe. But otherwise, you're on your way out. And this is basically what's happened here. So Super Micro, I do not like this one. I don't think it absolutely collapses over the next 2 weeks, but I don't like it. And I think this actually wants to head towards about $26, $27. So I'd expect a little bit more downside for Super Microcomputer. And then another big loser today, First Solar. Some of these guys, the solar energy names have been absolutely hammered. First Solar is one of the larger ones, down 8%. Sedge or Solar Edge was a short I had on last year for a while. That company looks like it could face, bankruptcy. First Solar is still one of the bigger ones, a $15 billion company, doing the solar tech company, providing photovoltaic or PV solar energy solutions in the U.S., France, India, Chile, and internationally. This one doesn't look so grand. I don't like the chart. I don't think the bottom absolutely collapses, but it looks like it has more downside. And today was the start of that. I think this one wants to get to 110, which would be new lows. 110 may be an aggressive forecast, actually. 50-week low is 116.5. So I'll say it undercuts and gets a little bit more towards that level. I'll say 115. I did have 110 as a level, so right here where my cursor is. This space just does not look good. Again, no reason to hold this company. Again, I like earnings confirming the trend, too. It's a combination of fundamental and technical. And really, there was no reason to – you give the benefit of the doubt with if it's made you money and it's had a rising 200-day moving average. But really, you're just giving a lot of time. The 200-day moving average here is still going – up until right here, it stopped January 21st. And then, stock was at 172. So with the highs back here at 300. So you gave it too much of a leash and you really got hurt. The first position cut I would have done ideally would be right here with the close under the 200 moving average, even while rising. And then you saw this tie in with the earnings. It didn't do anything. I mean, it had a spike for a while and then collapsed lower. So you really want to give these companies 1 to 2 weeks after earnings if they're having a character change right around the 200 moving average. Very telling. And same at the end, like I said, with Microsoft and Meta. All right, top 3 gainers of the past 5 days. Tony, your stock is coming up. But first off, HIMS. This thing has been an absolute beast. Today was down 5.5%, but this is the best gainer on the week, up 23%. I know folks are obsessed with this. Excuse me if you guys don't know this one. It's an $8 billion healthcare company. They do connecting consumers to licensed healthcare professionals in the U.S., U.K., and internationally. It's been a very, very hot stock, mostly on this huge spike in February to $73. And overall, a chart is a chart is a chart. A rising 200-day moving average. I don't love that it's been under 50 RSI largely since that exit right here in mid-February. So to me, this is a messier chart, but I'll give it the benefit of the doubt. It's holding a 200 moving average. There's definitely worse places than you could be than this. However, brace yourself for volatility. I don't think these guys report earnings on the 5th. Of course, it'll move. I think this goes lower. I think this wants to visit about $25. I think it undercuts the 200-day for one of these moves like this. It heads down here, and then it goes up again. But momentum is clearly slowing in this. Again, don't like to see the ball going off the table, lower highs each time. This was impressive here yesterday, getting as high as 38, but then a significant give back today. So let's see. It would be important for this 31 level to hold. I don't think it does over the next 2 weeks. All right, Tony, Alina, and probably the rest of the world, looking at Palantir Technologies, your second best gainer of the week, up 16% just in the past 5 days alone. This thing's an absolute beast, up 2% today. Why folks are especially looking at it right now is these guys report earnings on Monday. This thing's had an absolute great rise. It is I'll look at it at the end. I'll just give you a teaser. It's the third best stock of the year, okay, of the past year, the third best performer. I'll just give you the numbers. It's up 433% in 52 weeks. So you can do the math of what this thing averages. Amazing flows, truly. Since June of last year, this thing has just been really big. Right here, right around my birthday. Right here is when it really started experiencing overbought. And that was when it was at $25. And this thing has just continued zooming. So congrats to you, Tony. I hope you're in it. I'm assuming you're long. Just in terms of full valuation, I want to say, because I was talking to Lean as well, I think we said, I think this was a buy around the April 8th level. This is when it was $80. I said this one will break the triple digits again, 100, and it has, of course. So again, when I recommended it then on or around the 8th of April, my target was right around there, 100 to 102 to be frank. So right here at 118, upper Bollinger Band, even with volatility expansion, I have a target for about 113, 117, right around there. It's volatile, hence the wider, target. If you look at your 200 moving average is 63 or almost half. So brace yourself with volatility with this one. It's an absolute monster. Just be careful. I do think it pulls back. I don't know if, again, earnings you can't predict. It's going to be important for these guys. Again, what happened last earnings, massive spike up. Earnings before that, spike up. Earnings before that, spike up. So the trend is up. If it's up, it's like that Cardi B song. If it's up, then it's up, then it's up, then it's up. No, but if it's up, I mean, I could clearly see a gap to 140. I'm not expecting that to happen, but we will see. What is possibly very likely, I would think, is a pullback to, I would just prepare for this, to about the 100 to 105 level, which is not a bad thing. It's still holding those gains. So just be careful. It's had an extremely amazing run since the 7th. That's getting a little bit too cute, picking the absolute low, but 75, it had been there for several days there during, the depth of our swoon there. So hope that was a help for you, Tony. Obviously, one of the best stocks, the third best stock in the entire marketplace, and nothing but oversold, nothing but overbought after earnings, question mark. It really depends. I think a pop could take you to 140, but I really can't recommend buying on expectation of that happening. The current earnings, again, are Monday. They're expecting 13 cents, for goodness sake. So just be careful to hit the cover off the ball. I think it can get to 140. All right. So that wide variance for, a crazy moving stock. It's hard to tell, but this thing's overbought again for the first time since February. So folks want to get in, and getting into earnings, always a good thing. And again, the 52-week high is at 125. We're at 119. So again, I don't specifically trade earnings, but if they beat, I think it can potentially get to 140 because there's going to be a lot of FOMO. And if they were to miss or guide down and say they're seeing, decreased enthusiasm and, data storage and government deals, etc., I can clearly see it getting back to 100, which is the 20-day exponential moving average. All righty. So it's tough with a crazy volatile stock like that, but I would rather be a buyer than seller, of course. Be careful. The third best gainer this week, Tesla. So a lot of powering the ARK move in part, up 12% today, down 3%. Let's take a look. It's been a while. So Tesla, right, similar to the ARK chart, at the 20-day moving average. So again, don't love this movement. Tesla reported earnings last week, and we saw what happened there. Okay, that's where it kind of began this run from 226 to 289. So absolutely stellar. The 200-day moving average is still rising. It's at 292. We couldn't quite clear. So right here, my cursor is 292. It's squinching. It's trying to get there, but there's heavy resistance there. This is a tough one. It may have a couple of upside days left. We'll see again, like I said, teaser, what's going on with Microsoft and Meta at the end, Max 7 correlation. But I say potentially wants to get to 305, and try and get above this 20 moving average, but it just hasn't been able to do it since March 3rd. It's really kind of basing here, trying to pick a level between 295 and 215, which for Tesla, is a pretty tight range, if you will. It's working off these oversold conditions from March. So it's had a nice run, again, going back from these lows of 220 all the way to 280. So that is a massive run. It may have a couple up days left, but I think this one wants to settle down and head back towards about 270 in the next 2 to 3 weeks, right where my cursor is there. All righty. Okay, let's look at the top 3 losers of the past 5 days. So don't really love looking at, biotechs and stuff like this, but a lot of trading has been going on in Summit Therapeutics. These guys have been down. Let me move the box here. So as you can see here, these guys are down 27% in the past 5 days. You see what happened, hit a 52-week high. Don't really love, as I said, doing biotechs. Take a look at this. Overall, obviously a very great looking chart. This is a $17 billion company. This is on the bigger side. And they focus on discovery, development, and commercialization of patient, physician, caregiver, and societal friendly medicinal therapies. There you go. But overall, a decent stock. Great looking stock. Honestly, this almost looks like Palantir minus this when the market was hitting 52-week lows. No one sent a memo to Summit, but now significant give back. You even had bullish confirmation here. Again, divergences don't always work, or confirmations don't always work. You had a higher high, and then right after this thing collapsed. Don't know specifically what happened, news or otherwise, but this thing went in a day from 36 down to 24, still holding a 50 RSI. There's definitely worse places that you can be in. Potential on volatility, this visits $20 even. Again, it was up 2% today, trying to put in a rebound. I think this potentially goes to $20 on a volatile move. It potentially gets to 19, still holding an upward sloping 200-day moving average. I think there's worse spots you can be in. This looks like a solid buy. If you give it like another week or two and you get that entry around 19, this potentially heads back to about $30, which is massive. Be careful with the options. They're super duper expensive if they are liquid at all. I would probably just play the stock to the upside. Fiserv, we were looking at this earlier as well last week, I believe. This is down 16% in the past 5 days. So a superstar stock going into March hit 239, and then earnings again. So this is important. So earnings dipped this thing, really kind of a character change. The 200-day moving average is still going up. It is stuck at 198. The lows here was at 177, and it's trying to rally. So this isn't just a day or two. Now it's spending some time, although it's inching higher to that 200-day moving average. I think this base is around 180 or so this week. I think it finds a low and it tries over the next 2 to 3 weeks. It might take some time and try to get towards 200. I think it tries to get above this 200 moving average. It's going to have to do some hard work. And again, these guys already reported earnings. These are the financial services company, payments, financial tech solutions, international, $100 billion company. So massive. Overall, a great looking chart. Like I said, peaked in early March. Earnings does not look good here. They basically came in line. They were expecting $2, or they reported 214, and the estimate was 208. So I guess it was not enough for investors. Potentially future guidance, not great either, but massive trading that day on the 24th. Really, folks, let their opinion be known. It was the most trading in the stock for the year. I'd be careful with things like that. And now it's not holding largely a 50 RSI since, similar to the S&P, the week of its 52-week high. So I'd be careful. I do think it rallies back up to 200 over the next 2-3 weeks, but it's going to be difficult. All right, and then EAT. Brinker, these guys own Chili's and like what's the other big chain they have? I think Maggiano's, I believe. But these guys are large. This is one of the better places to be in the entire market. This is the best chart we've seen. Not one test of the 200-day. This is when people, I know Kramer always talks about, is like people going to Chili's for their discount deals and whatnot. It's a $6 billion company out with $5 billion revenue. There's a lot of other companies have much worse valuations than that. They reported earnings yesterday. They were reported 266 versus a 257 estimate, down 2% today. I think this consolidates a little bit. I think this wants to go lower towards about 121 or so. It still will not test that 200-day moving average. And honestly, it's not a horrendous way. I know it's not wise to play the consumer right here, but there's worse charts you can be in than this. I like this one for a buy if you're patient over the next 2 weeks. Just be careful because of the space that it's in, truly, middle, lower income tier consumers. So be careful. You got like a bad number today, a lower GDP. Numbers like this are not, companies like this are not going to be looked at proudly. So, yeah, I think, like I said, it goes down to my cursor right around there, 121 over the next 2 to 3 weeks. And then I believe it does rebound towards right around that 150, 146 mark. So still largely holding a rising 200-day moving average. So Chili's, who knows? And then one thing, I will do your nat gas at the, we'll just do it now. Why not? So natural gas for Tony from Italia, down about 83 bips today. I believe you are still short. We were talking about this trade the other day. So again, the 200 moving average stuck just brick wall right here at 1630. It's technically going up ever so slightly, almost a penny a day. And it's held. So this is exactly what I'm saying, Tony. So this has just 4 days under the 200 moving average, oversold, rebound off of it, and now it's closed above it for 3 days. I like that kind of behavior. I think this rallies over the next 2 weeks to about 1760, right around that level. So that's about 90 cents or so from here. I think it's a upside. So I know you're likely bearish. Again, notice the kind of a divergence. Oil has been getting absolutely slammed here on global growth, and that gas is holding in just fine. It's kind of what we said. This is not a direct tie with, XOP, XLE, and your Exxon Mobil's and et cetera, which have been getting hammered. So I still like nat gas. I wouldn't say, buy it overweight, hand over fist, just cheap calls. But I do think there's more upside. The flows don't look horrendous, and I think this does want to revisit that 17.5 level, which is its 21-day exponential moving average, and the 21-day exponential moving average. I don't think it's ready to say see ya and just go to the downside here. It did get a little bit scary right here. I'm sure you were celebrating your short here when it got as low as 1504 last week, and then now we're rocketed up. This is a volatile asset, of course, as you know. So I think it heads up, as I said, towards about that 17.5 level, and then consolidating probably close towards the 200-day in future a month or so. All right, now something's exciting. I don't really do this. Best trades of the past 52 weeks. This is actually really cool. The best stocks. I'll look at Meta and Meta at the end of this. But real fast, the best stocks of the past year. Oh, I was on Chart Report yesterday talking about these stocks. A lot of fun talking with those guys about truly everything from, oh my God, we talked about everything from Brazil to horse semen. So, I mean, really a diversified portfolio. If you want to check it out, it's the Chart Report, and you can listen to the recording. So this is the best stock of the year, Ast Spacemobile. Okay, if you guys don't know this, they're diversified telecom, Bluebird satellites in the United States. This is an $8 billion company on almost no revenue, $4 million revenue. So basically a rounding error. These guys already reported, it seems, back in March. The high, so a couple things. This one looks a little bit sick in that It's trading under the 200 moving average. This is what we're saying. It's still rising. You can't keep a great man down in that it is the leader of the year. It had a much cleaner rebound here at the end of January. This is the stock of the year, okay? It's ASTS. It's up at 939% over the past year, okay? And literally, as I say that, so last May, it was $2. It hit in August 39, and here we are at a $23 23 handle. The problem, and today was down 3%, the problem is it's now been under the 200 moving average since March 31st, which is exactly a month. Don't really love that, but obviously due to its performance, I would love to see it get above it. The problem is I think it's going to have a rough 2 weeks, and I think this one possibly wants to descend towards $20 even, this lower band here. So then it'll get even harder skis, if you will, for AST to rebound. So we'll see. But if you captured any of this move, really, congratulations. But this is the stock of the year. I would be careful. It's had a nice rally from about 19 to 24 in a handful of weeks, and now starting to get back a little bit. I think it wants to go lower to about, I mean, $21, $22 seems pretty destined. I see potentially it going down as low as $20. All right, so that's the best stock in the entire market. Next, Rocket Lab. So this is up. It's the second best stock in the market. It's up half almost, basically, of what ASTS is. So 477%. But this is still the second best stock in the market. These guys were trading just back last August. Again, Mageddon hit $4, and then they hit $32 in January. And this is what I'm talking about, a nicer, sharper, cleaner rebound. When the market, S&P, was hitting 52-week lows, nobody told Rocket Lab this thing quickly got above, and that's what you want to see, not spending a month under the 200-day like ASTS. But yeah, absolutely phenomenal charts for Rocket Lab. These guys are aerospace and defense. They're a $11 billion company. They space company, launch services and space systems in the U.S., Canada, Japan, and international. It does look like it's got pretty staunch resistance here at this level, 25. It doesn't look like it's been through it since S&P's had its all-time high. So it looks like pretty stiff resistance there at 24. It got to Chembade right at it 2 days ago. So we'll see, but a beautiful looking chart overall. I think it wants to descend over the next 2 to 3 weeks. Again, I wish I had bullish things overall to say, but when I have the kind of picture on SPY, that's going to be trickling top down on the rest of the individual constituents. Yeah, this looks like it wants to go to $18, but that's still not all bad news because it's still holding a rising 200 moving average, but it declined from 22 to 18. Last I checked, it's $4, and that's going to be pretty significant. It probably drops you down to the similar RSI of 45. To me, overall, still good in this. I just don't think it's going to break 24 anytime soon. All right, and then the third best stock of the year. I'm not going to go through super duper the technicals, but it's Palantir, what our friend Tony and Alina talked to us about earlier. Again, an amazing chart. The three I just showed you. ASTS is having a situation of a dilemma right now, trying to get above its 200-day. But Rocket Lab and Palantir, absolutely no problem. Palantir, not even a touch of the 200-day. Last was again when they recorded earnings serendipitously, or not so much. Actually, only closed down 2.6%, and that's what held that down. That was the last time these guys had a muted earnings report. That's what I'm telling you. It's hard to figure, but if they pop, yeah, I mean, it's probably going to, yeah, like 130 to 140. You got to be careful with this one. Obviously, it's moving, and I think it heads to the upside decently. I don't think it's going to just stop here at 125 at the prior all-time high. I think it probably gets closer to 135 with a line of FOMO. And if they just meet earnings, 100. But overall, we're looking at the year. So we had ASTS up 939% in 1 year. So if you allocated anything towards that, congrats. Rocket Lab at 477, and then this right behind it, Palantir at 433. So pay attention to these three names. Speaking of pay attention to names, let's look at the big kahunas reporting right now. So let's go on the one-day chart. All right, so, and we'll sign off after this. So again, VWAP going into the close here for Microsoft was 391. Pow. These guys are trading right now 420. That is beautiful to see. So right now, if this holds, I don't know when Nadella speaks. I think he might be doing it right now. We're in 10 minutes. So we're trading at 420. And Microsoft has looked so sick. But look at that. That's huge for the entire market. This is the second largest holder or oldest allocation in SPY, and it makes it up even more in the Qs. We're here at 420 right now. As you can see, we have not been above our 200-day moving average. It's crazy to say. Microsoft has not been above its 200-day since the end of January, okay, since we had winter coats on here in the East Coast, and hit a 52-week low, something you don't often say about Microsoft, but it did that on the 7th along with the S&P at 345. Yikes. And now it's up to 420. Again, the 200 moving average at 414.5, sliding lower. Hopefully it closes above 14. I'm not even obviously 420 would be great tomorrow. Just have a close above 415 and a little bit of building over the next couple of days to weeks would be really, really constructive for the market. I'm not so sure it does it. Let's see what they say about data center investment, AI usage, etc. But I just wouldn't be shocked if this still visits about, I hate to say because I love Microsoft, but the chart doesn't give me warm fuzzies. I think it could definitely revisit. It has a very good chance of revisiting 380 in the next couple of weeks. But let's see. As we said, earnings can confirm or reverse a company's fortunes. And so far, so good. This has had a sharp rally from 360 just in 9 days all the way to 420. So let's see. And then as we shape, we go the other way to Meta. Let's see what's going on with Meta right now. So a big move, we said, for Microsoft all the way to 420. A big move. Same thing for Meta. That's good to see, up 6% here. So VWAP, I use VWAP because it's basically the price outside of just the close. I like using VWAP as well. So Meta here, VWAP 539 going into earnings. And here we are, 577. Let's see where this is in terms of the 200-day moving average. Just like that, less than Microsoft. So Microsoft is actually above. It just peeked its head like a little prairie dog above its 200-day moving average. Meta is trying to do it right here. The 200-day is 579. It's trading 576.5. So this needs a little bit more buying and a surge and of buying tomorrow. And this is above a 50 RSI for the first time since also the week of its all-time high. So you're seeing this a lot in the charts, these divergences, these big exits. As soon as we hit all-time highs or 52-week highs in many instances, then you see a reversal. Be weary and leery of them. But this would be very, very good to see. If you get the bigs like this, closing above the 200 moving average, this will start to base the S&P and start to propel us higher. It's as simple as that. Hopefully Amazon and Apple can do the same thing tomorrow night if they're dancing with their. So I'm just going to do this super quickly. Let's see where they are in accordance with their 200 moving average. So if Apple, for example, was to do a similar move of what just happened, and it seems like it might be in the cards, we'll say this is the biggest holder in SPY, that would basically mean a move from 213 where we are now to about 226, 227, 228. That would be huge for the S&P. Before you know, if Apple does that, Microsoft, Meta, and then let's just look at Amazon, you're going to see SPY drift towards 572. It's just math. So again, this is a nice candle here on Amazon from today. So yeah, so again, so we closed at 190. Yeah, the 200 moving average is at 199. Again, if you can see Amazon get a nice just $10 pop, this thing moves too. We'll see if they're in the news based on their new tariff revealer there. It tells you what the items are, how much an American toaster would cost versus a Chinese one and what the tariff is. So, and the administration did not like that very much. Amazon's been in the dumps here since, I hate to say it again, hasn't held above 50 RSI since the week of its all-time highs, when this is a multi-trillion-dollar company in early Feb. So some of the things to expect there and to be aware of for the rest of the week. I will see you Friday with a end of week. We'll see how this all shook out, and we will see you then. Bye-bye.